a little bit of bounce off of these drops. Basically, it's not very different from what happened yesterday, just a little bit lower, but we're getting these sell-offs. Hey, look, there's a lot of selling coming in, people are getting out. Then the buyers come back in. The dip buyers, it's the same thing as always, right? People buy the dip, they always think it's going to come back. And it has always come back. Look how often it's come back. So, you understand the mentality. If anybody sees a little tiny sell-off and they jump right in going, oh yeah, now I didn't miss it. The dollar has totally dived today. That's what's saving the market. You guys can't see these things, but I can. All right, let's see. So dollar. There it is. You can't be there. So the dollar took a huge dive. I mean, back to the lows of the last few years. That's what's happening. That's what's happening lately, guys. The story of 2020's market is the dollar went from 100 to 90. It's down 10% for the year. That's why we're having such a big rally. That's a lot. So the factors of the rally are stimulus checks. The stimulus checks, just generally the general bailouts and things like that, payments to keep business open, unemployment bonuses, the Fed money that's going everywhere, the loan program that kicked in, just all these different ways that the government has been pumping money into the economy to the tune of like $7-8 trillion, like 30-40% of the economy is stimulus. And that plus we devalued, of course, doing all the stimulus devalues your currency, right? When you put out $8 trillion and you had $100 trillion in circulation, you've devalued your currency by 10%. That's pretty obvious. So we have, in fact, devalued our currency by 10%. By printing 10% more money, we have devalued the money that we have by 10%. So, when I don't want to be political. When an administration tells you that they're not taxing you, but then they devalue the crap out of the money you have, they're not just taxing you 10% this year. They're taxing you 10% of everything you've ever made for your entire life. That's what a confiscation of wealth is. When somebody runs such a horrendous economic policy that they trash your currency and they destroy the value of everything you've earned your entire life, that's devaluation. That is taxation. It's just not called tax, but it is a tax. It's much worse than a tax because you're not keeping what you earned already, what you already paid taxes on. They're taking that money. They're taking the money you put in the bank and devaluing it by 10%. They're taking the value of the things you own and devaluing them by 10%. But fortunately, if you're a stockholder, the stocks rise in value because it takes 10% more money to buy the same stock. And that's what saves us. That's what saves the people in the investing class. But this is horrifying what's being done to the American people right now. And Biden's not changing that. Biden's following the same policy. There's no change in this policy. He's got the same Fed chairman, Powell, is going forward. He's going to speak in an hour. We're going to hear from him. So we've got Powell doing the same thing, the Fed doing the same thing, says they're never going to stop easing. They're never going to pull back on monetary policy, not until, unicorns come home to roost or whatever the hell is supposed to happen. And this is what we're going to live with. This is how the world works now. So we had this long, steep slide in the dollar value in 2000. Then we have the 9/11 thing was here, right? It was September 11th, 2001. We had that. The chaos caused the dollar to surge, but then we began devaluing the currency, easing monetary policy, blah, 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 to fight off that recession. And the market, don't forget, was collapsing this whole time. So we were fighting off that recession, trying to prop up the market, whatever. Then we get to 2008, and with the dollar completely devalued, we have a currency crisis, not a currency crisis, we had a financial crisis. Financial crisis began causing the dollar to gather strength because it was a global crisis, so the dollar seemed safer than other currencies. Plus, it was way oversold anyway. So then it drifts back up to 100. But at 100, which is still 20% off its highs, at 100, we decide, oh my God, this is we're doing too well as a country, so let's start not taxing corporations and not taxing people as much and running massive deficits again. Let's do that. See how that works out. So that's how we engineered this drop in the dollar value, and then we climb back up a little bit, and now we've completely trashed it again. And don't forget, this is against Brexit and the EU falling apart. That's how much the dollar sucks, is that we can't even beat the UK and the rest of Europe, which can't even agree if they're going to have a currency in the future. You know, if the union breaks up, the euro dies, and so against a currency that could become worthless, that's our big competitor in the world currencies. We can't get a grip. Oh, and our other major competitors. So the euro is the biggest currency besides the dollar, then the yen, and on the yen, we can't compete against the yen, and that country is 250% of their GDP in debt, and we can't compete against them either. If you don't think we're messed up, you gotta really think about that. How is it possible that our dollar is seen in such a poor light right now? But you'll see, because we just appointed Janet Yellen, easy money person, Jerry Powell, easy money person. There's nobody who wants a strong dollar in the government. There's nobody who's going to sit there and worry about whether or not the dollars that the working American earns and puts in his pocket are worth anything. You can give someone a $15 minimum wage, but if the dollar is only worth 80 cents, you didn't do much for them, did you? Then it's a $12 minimum wage. So we will see how that plays out. Meanwhile, we stopped out of all of our index shorts because we got these big bounces. And let's see what those were. Why am I not able to do this? Oh, no, trade active. There we go. That's oil. We didn't short oil. Should have shorted oil when it was up near 55. Holy cow. Okay. So good day, closing out all this stuff. We talked about this earlier, so I'm not going to get back into it. But as far as how you trade it, it's not complicated. Yeah, let's talk about that because that's kind of important. So yesterday, TD Ameritrade is restricting trades in GameStop and others. Well, that's really messed up. Oh my God. People are going to be trapped in those things. That is just crazy. See, this is weird. I mean, you can't change the rules like that. Oh, I know. Yeah. So yesterday, so here it's very simple. We talked about this yesterday. 3850 on the S&P is 1,000 points over our must-hold line. I know this is not big. Maybe if you open in a new tab. Oh yeah, there you go. So 2850 on the S&P is our must-hold line, and we've talked about the fact that if you allow for the fact that the dollar is 10% weaker, if you allow for the fact that the corporate taxes are much lower, if you allow for the fact that there's stimulus, you can see how you can get to this level. But it's not, this isn't a real level. This is a level based on 20, oh, it's probably really loud. The magnet. So based on a real value of 2850, you add 10% for low taxes, you add 10% for stimulus, you add 10% for the easy monetary policy, so on and so forth. Lack of regulation is a factor. All these things that Trump has done. So yeah, all good for business, great. But it doesn't change the real value of the business. If you drop the business into a neutral zone and say, go make money, go on, boy, go make money. Good boy, make money. You send it out there. The problem is it can't make money, not the way it's making money now. Because why? Because it's paying a real tax rate, because it has to deal with real regulations, because it has to pay workers a living wage. It has to, it doesn't get free money handed out by the government. Its customers aren't getting free money handed out by the government. There's a lot of reasons that this all falls apart in a normal environment. Now, we're still not in a normal environment. So I'm not saying that it's automatically going to be taken away, but it doesn't change the value of the business. That's why the must-hold lines don't change really, because we're not really convinced. Maybe 2 years into Biden, I would be convinced that it's never going to change, that they're never going to go back to regular taxes, that they're never going to stop giving stimulus, that they're never going to put regulations back. I find it hard to believe, but if the facts change, we'll change our mind. But at the moment, we're just in this fantasy economy that's being propped up by stimulus. I mean, it's a, if a person can run a 4-minute mile, right? A really fast person can run a 4-minute mile. That's been tried millions of times by humans all over the planet. And the fastest milers in the world are 4-minute milers. And I don't know what the real record is. Time fastest mile record. 3:43. So 3:43 is the world record. So how do you get to 3:43? How did Hickam El Gerluda get to 3:43? Well, the commercial where they say it's got to be the shoes, right? It's the shoes, it's the training, it's a lot of things. But when push comes to shove, the real advancements have been in the shoe technology, in the fabrics they use, and so on and so forth. It gives you a little teeny bit more spring in your step, a little this, a little that. So take it to another level. Remember that guy who had those blade legs and he won like a marathon or something? Not a marathon, he won a sprint or something. Because those blades were really springy, and the Olympics were like, well, dude, you can't do that. That's not, those aren't legs. And he's like, well, screw you. And then he killed somebody. That guy murdered somebody. Allegedly, well, I don't want to say allegedly, whatever, you know what I mean. He's like, I don't know for sure if he was convicted, but I'm pretty sure he was. But anyway, so the thing is, when you're aided, you can do certain things, okay? If you want to compare your 4-minute mile to the 4-minute mile set by Spartacus back in the year 14 in the Olympics, you want to probably have them both wear the same sandals and then see how fast this guy runs a 4-minute mile. When you're assisted and you have a record, it doesn't mean that the actual person has changed. I'd say, yes, we probably have better training now, and there's probably differences there. But, things, it doesn't change the base person. It doesn't change the human. We haven't evolved the human to be a better runner. We haven't breeded running humans or whatever. And even if you do that, you're still augmenting. But then you would say that's a permanent change. If you breed humans who run faster for whatever reason, you would say, okay, well, that's a permanent change. These people are always going to be able to run faster. We've now breeded faster humans. We've breeded smarter humans. We're not going to be as well, assuming they were dumb, but we're not going to be as dumb as early Homo sapiens. We know math, we know learning, we know spelling, we can have languages. We've evolved, and you don't assume that we're going to devolve. This isn't Planet of the Apes movies, right? We're not going to devolve back into something else. The same thing goes with companies, okay? Where have they evolved to, and what can be taken away and what can't be taken away? And like I said, I think the things that we're counting now, it's only been a few years of this, are things that can be taken away. And that's why you've got to be really careful looking at your companies and assuming that these values are here to stay. They very, very easily could not be. These values are based on a set of conditions that could change. And frankly, should change. They should change because we can't afford this, because of the debt, because of the repercussions of what's happening, because of the inflation that's absolutely going to come at some point. So how do we properly value companies? So, certainly not the way GameStop's being valued. Where's GameStop? So here's GameStop, 380 it topped out at. It's at 332 right now. Just another day in the market. That's up 125% at the moment. It's up 180 bucks for the day. And la-di-da, you know, we'll go about our business. So, you know, there's no reality to that. They didn't do anything. They didn't even have an announcement. Nothing happened except it got a notification on Robinhood at first that it was a trending stock because of this last week. They got shorted. Then like Citron or somebody like that came out and said, oh, this is bullshit. This is a stupid buy, blah, blah, blah. So then the people on Reddit and the people on Robinhood organize themselves to buy the stock out of spite against Citron. I'm going to say Citron, even though I'm not sure it was them. So against Citron, they're buying out of spite just to burn them. That's how this started. But then it started gathering steam because everybody saw how incredibly well GameStop was doing, and everybody started jumping on the bandwagon. And now it seems like a huge momentum stock. But everybody in the business knows it's completely bullshit. And it's not just GameStop. There's a bunch of stocks that are doing this kind of stuff, like BlackBerry of all things, like AMC Movies, which are on the verge of bankruptcy. And this is what's interesting now. So AMC goes from 5 to 20 and back to 15 now. But they've got a thing going on, Save AMC. Save AMC Facebook. Oh, that's all my children. It is this thing. No, this is all my children too. Anyway, they were doing this campaign to save AMC. I think it's getting confused with this other thing. But the point is that they're basically buying it to save it, but buying a stock doesn't save a company. It kind of can, because they could use the stock as leverage to pay off debts and whatever. But you got to get someone to still accept the stock, and the lender has to be pretty dumb to accept your hyperinflated stock as a debt payment. Although they could buy it and flip it really fast or something like that. But people want, people like AMC. See, this is a trick, and it's the same trick that I used to talk about with Tesla or with Bitcoin or whatever. If you find a stock or a commodity or whatever that people want, that middle class, upper middle class people want, and you keep the share price in that range that they can buy it. So AMC is not expensive. It's like a $20 stock, and it was a $5 stock for that matter. So people go to AMC. Okay, probably I'd have to guess at least 20% of the population goes to the movies during the year at some point, 60 million people. So if 1 out of 5 people, and think about that, right? Who do you know who doesn't go to the movies? Probably a lot higher. But so in other words, a very, very large percentage of people who play the markets go to the movies. And a lot of the young people go to the movies. Those people are the ones who are on Reddit and on Robinhood and those other platforms. They're the ones sitting at home buying these stocks. So when they see AMC is $5 and they pay $10 for a movie ticket, they don't think twice about throwing $25 worth of stock and to buy AMC stock. They go, oh, that's a good stock. It's cheap. I'll buy it. They're rewarded because it starts going up. They start thinking this is how you make money in stocks. You chase after things that they talk about like this. The reality for AMC, and reality is a funny word these days, but the reality for AMC, if I can get in there, is AMC has how many shares? Only 100 million shares. So at $16, it should be $1.6 billion, right? So let's make sure. So market cap, 3.5. That doesn't make any sense. Let's try that again. Oh, the float is a lot less than the shares. That's why. Okay, the float's 164 million shares. So they have 164 million shares outstanding. So however this thing is doing the math, obviously something's a little weird. But the float, they're considering $34 for whatever reason. But the point is, it's a very small float, and there's only 160 million shares, and that means that if everybody in America who went to see a movie last year bought 2 shares, they'd all own the stock. And then what happens? If everybody who went to a movie spent as much as a movie ticket on an AMC stock, they would now own, the movie-going audience would own AMC. If they're not the kind of people who are trading back and forth and just hold it and put it in their account, then the amount of tradable AMC drops considerably. That then completely squeezes the shorts because they have to buy and they have to get out of their position at some point. So when they try to buy, they can't find any more shares because all the people who go to movies bought up all the shares and left them in their pocket with the ticket. That reduces the amount of tradable volume, and the volume of AMC daily is 54 million shares. That's 1/3 of the stock trades on an average day. That's crazy. So this thing is a real trading vehicle. It's just really, that's the average volume. It's not like recent volume. Volume right now, 900 million. 900 million, when there's 160 million shares outstanding, means every single share is traded for 6 times. So today, every share of AMC has flipped 6 times. Today. That's crazy. It's not a stock, it's a freaking roulette wheel. It's just complete nonsense. And you can't trade it. You can't sit there and figure it out. There's no figuring out of this thing. This is insane. But that's what's happening. And I do like these stocks, and we talked about this years ago with the Bitcoin and everything else. It's the same thing. If there's only 11 million Bitcoins, and there's, you think of the nerds on the Big Bang Theory, right? And those guys, they exactly, they got them pegged. I mean, I'm one of them, believe me. I got the Spider-Man behind me. But you got to, I go to a comic book store and I'll buy a $200 Spider-Man statue because it's cool. I like that stuff. That's fun. I enjoy those things around my house. More so than my mother, who has ballet statues and things like that. I like superhero statues. I think they're fun. So the same people who are going to do that are going to go out and buy a Bitcoin for $100 or $1,000. It doesn't matter, and they'll put it away. But they consider it more of a collector's item, not a store of value. It happens to go up in value. That's great, but these guys aren't selling them. They're only buyers. That decreases the float. That makes it tougher to get it. That increases demand and drives up prices for what's left, for the stuff that hasn't been put into somebody's wallet and kept there. And in this case, it would be a digital wallet. The same thing happens with stocks, though. They go into an account. My daughter's on Robinhood. She buys stuff, and she usually buys things because well, that's different. I'm a long-term investor, so she's a long-term investor. She got it from me. But she buys her stuff, she puts it in her account, that's the end of it. It's in her account. She owns the things she buys. She doesn't generally have an intention to sell it. So a lot of young traders do that. A lot of older traders do that too, and they'll buy something, they'll put it in their account, and they wait patiently. Not everybody's day trading everything, but that then reduces the amount of available shares to trade and drives up prices. And the shorts are then forced to buy from the remaining available pool, which shrinks, and that causes a short squeeze, and the stock starts flying up because the shorts get more and more desperate to cover. There's less and less stock. The stock price goes higher. More and more people buy the stock and don't then flip it and sell it. They're just buying it to hold it, and that can drive the stock up. It can also sustain the stock. So it's not a no-brainer to short it, because you can also sustain the stock because so many people are buying the stock as a long-term investment to hold it. Even though that long-term investment is foolish, over time, it's almost certain to lose its value. Over time, they will disappoint shareholders. They can never make the money that this valuation is pushing them. AMC is now a $3.4 billion company, if we believe, however it works out, but if we believe that, it's a $3.4 billion company. And if we can find one of my valuation thingies, I have none here. Really? Oh, there, Stockopedia, haha. So AMC, Gilead's still cheap. So AMC, net profit. These are the good years: 100 million, 112 million, minus 487, 110 million, minus 149, $3 billion in losses. This is a $600 million market cap. See, these guys have a very different market cap than the other guys. There's a $600 million market cap according to Stockopedia. So one way or another, this is not that valuable of a stock. But anyway, so 2020 estimate, they're going to lose $4 billion in 2020. They're going to lose $7 billion in 2021. Every penny you put into the stock is going to be lost this year, and next year they're going to lose more. They need more money just to keep losing at the pace they're losing at. This isn't enough. The amount of money you gave them for the stock, even if you had given it to them, but you didn't give it to them, right? You gave it to somebody else who owned the stock. They didn't get any of it. This is, it's not ludicrous. Ludicrous isn't how you describe it. This is just not even based in any reality that can be grasped at. There is no reality in which this works. Can't happen. Let me look at GameStop. Same thing. So GameStop now has a $10 billion valuation. $10 billion. What are we getting for $10 billion? Well, look at this. They made $300 million in 2017. Well, that's pretty damn good. But still, $10 million is 30 times that. So it's 30 times their best earnings, basically. Or 25 times their best earnings over there. Now, I'm sorry, and that's at 327. That's crazy. Anyway, but in 2019, this isn't Corona. In 2018, barely broke even. In 2019, forget it. Just decide take the minus 600, minus 471 last year, minus 141 is planned this year, next year. Well, this year, and 2022 maybe kind of around break even. And you're going to pay $10 billion for that. You're going to take $10 billion of your hard-earned money and put it into this. Why? What's the logic? the revenues aren't increasing. What are they going to do? Games in the first place, and the problem GameStop had before all this happened, back here, the problem with GameStop, which frankly I predicted long ago. I said if all these apps are games now, that you can just download an app and play a game on your computer or play a game on your iPad or whatever, or your phone, what do we need GameStop for? What's their function? And we haven't quite gone the way where Xbox and whatever are downloading games or Oculus and things like that. We haven't quite gone that far yet, but we're going that far. We're going to go there, obviously, where all games are going to be digital games. And you'll just download everything. So what are you doing at GameStop? And you say, oh, well, kids need a place to shop or whatever. No, they don't. They shop online. They go to digital stores, they look at things, they read the reviews. You go to the App Store on the iPad. The App Store outsells GameStop by a mile. So what's their function? It's a dead, dying industry. It's got no chance of making a comeback. There's no reason for this to be happening. They don't have future prospects. They're not going to justify this $10 billion valuation. They're never going to justify it. You know, even if everything did come back, still, how are they going to make enough money to justify that value? Doing what? What is their source of revenue? Where does their money come from? Even the games they do sell are many of them are subscription games. So all you're doing at GameStop is buying the first game for the introductory price, $50, $25, whatever it is. Then you go and sign up, and from then on, you are constantly being downloaded to the latest version. You don't go back and buy it again. You know, my daughter is still playing Warcraft. We haven't bought a Warcraft disc in a decade. You know, she still plays Warcraft, 20 years old. She still plays Warcraft. I would play it if I had time. I don't have time. It's a fun game. Oh, I play Call of Duty on my iPad. I like that. I love killing people. It's really fun. So Call of Duty on the iPad, that's my commercial. And again, it was an app, right? I downloaded the app. It actually was kind of free. If I remember correctly, it didn't cost any money. They try to get you to like buy, you know, cool stuff in the game, but you can play the whole thing for free. So, you know, to me, it's not a really good business. AMC is a tricky business too. The movies are a tricky business, but at least I could see people want to go to the movies. There's still that desire to go to the movies. IMAX, you guys know I like IMAX. Now here's the difference. In IMAX's case, and they've been popping too, they're up around 20, but 20 for IMAX is $1 billion, just over $1 billion. IMAX has made 22 million, 40 million. They were on a path to make 50. Instead, they're losing 100. But they're not losing 100% of their market value. They're losing 10% of their market value. That sucks, but it's a sustainable hit. And they're going to come back. They already have a plan this year, not last year, not next year, this year, coming back, making $20 million this year. Then they're going to go back to normal, 50 million plus, back to some growth. And they're going to be, and if they're making 50 million a year and their value is $1 billion, then they're at 20 times earnings. I can live with that, and it's a growth company. The growth has been stuttered, but I think it's great that they got through the crisis, and they made money last year, 50 million bucks. They lost 100 million this year, and now they're back to profitability. That's the kind of company you want to invest in when they're down. Now, of course, we talked about IMAX a while ago. When they were down at 10, there's a no-brainer down here. They were half this money a little while ago. Now they're 20, but at least they haven't gotten away. At least they haven't gone crazy yet. But if the crowd is jumping on stocks like AMC and like GameStop, they're jumping on mall stocks, right, that they think are undervalued. Macy's even has taken off. Macy's gotten crazy now. And again, what is it? Notice the patterns. These cheap stocks that everybody knows about, that people go to. SKT is another one, Tanger Family Factory Outlet. I actually caught myself that time. Macy's $5 billion. Now, Macy's, I was banging the table on this whole time. But Macy's is now $5 billion again. They make $1 billion a year. In a good year, they make $1 billion. They're projected this year to lose, but they didn't even lose money last year. In 2020, they didn't even lose money. They made $564 million. 2021, no Christmas. That's why their year probably ends in June or something like that. Doesn't say. But anyway, so whatever year, whenever it ends, it doesn't. Certainly, this includes Christmas. Christmas was dead. We have no Christmas, therefore they're not going to make money this year. We lost Christmas, but that's okay. 2019, we hit Christmas, so we didn't get a terrible loss. 2020, no Christmas. There's no way to recover from not having Christmas if you're Macy's. But next year, they plan to turn it around, and they expect, even if this Christmas is shitty or whatever, they'll make it through next year. Next year should be back to normal. And after that, back to making $1 billion a year. If they're back to making $1 billion a year and they're $5 billion, I want them. And that's why I was banging the table here, being like, of course I want them at that price. You could liquidate them for better than that. But what are we doing? We're going through the mall. Now we look at Tanger Family I can never do it. Factory Outlet, Tanger Factory Outlets. And the thing about them is, and again, we were banging the table all year long on these guys too. Now they're flying. But what is it about these guys? They're an outdoor mall. And we also invest in Simon Property. We'll look at them next. So now we're down to $1.5 billion market cap. And in a good year, they're making $200 million. This year, they're losing $40 million. Next year, they're going to break even. That's fine. I can live with that. But then they turn back and start making $80 million again. $80 million on a $1.5 billion. Again, you're at 20 times earnings. This is reasonable. Now, don't forget, this is double where it was. It was 10 times earnings using the same logic. This is what I was telling you guys all year last year, how great this stock is, how ridiculous it was to undersell it. So there's that. Then you've got Simon Property Group. See, these mall guys, they will adjust. As long as they can survive, they will adjust and they will figure out how to use their space and make money. Now, Simon Property Group is interesting. They have not taken off yet. Not really. They're still way down from where they were, $30 billion. But don't forget that the Reddit crowd doesn't know that. All they see is the price of the stock. They don't understand the concept of market cap, most of these people. They just buy stock. A stock is cheap when it's $5, and a stock's expensive when it's $1,000. That's their logic. There's no rationale to what they are looking at. So for $30 billion, Simon Property makes $2 billion a year. And even this year, even in a disaster, $1.3 billion. That's a winner. Here's how they handled the crisis. Look, they were doing this. It was very steady growth. Then something bad happened, and then they'll go back to this growth. They're going to come back and start doing this again. So if they're back here, so $2 billion, if they get back to $2 billion and you're buying the whole thing for $30 billion, that's 15 times earnings. It's a great company. Because Simon Property is high-end malls. So most of the stores in Simon Property, and it's what you got to look at. Most of the stores in Simon Property are there. They're big malls. So they're not the kind where like there's only a Sears. In fact, mostly Simon Property don't have Sears. They have Macy's, they have Bloomingdale's, they have Saks. They don't tend to be the Macy's kind, the Sears kind of malls. They're high-end malls though, so they'll tend to fill up. You know how you have a dead, if you have a town with a dead mall. Even when I was in Amherst back in the 1980s, in the early 80s, we had a mall called the Dead Mall. It wasn't completely dead, but it was basically dead. It was a gutted mall. The new mall kicked its ass and it killed the old mall. And the old mall was called the Dead Mall. It was only a couple miles down the street from the new mall. The Dead Mall though had the movie theater, so it still had signs of life. There was enough people coming there all the time because the new mall didn't have movies. The Dead Mall had movies, so people still went to the Dead Mall, even though more than probably 75% of stores were boarded up, but it still eked along its existence. But the new mall, no problem at all. Boom, boom, boom. Always had great traffic and everything else. So there's the malls that die take a long time to die, and the stores that survive go to the better malls. The better malls are the Simon Property malls. And the Tanger Factory Outlet malls are also high-class malls. They're very nice. They're outdoorsy, the reason I liked SKT this whole time was I was like, well, in COVID, if you're going to go to a mall, wouldn't you go to like a mall where it's mostly outdoors? And that's what the Tangers are. They're outdoor factory outlet malls. But not like a crappy factory outlet. Like usually they have little parks in the middle and things like that. They're quite nice generally. And they always have events and festivals and stuff. I mean, that's not good during COVID, but usually they do a lot of stuff to draw people in. I always think they're a good company. Very high occupancy rate. They also purposely make sure that no single tenant can hurt them. They keep no tenants more than like 5% of their total occupancy. And they spread them around, and they don't allow a concentration of things. They're very, very smart about the way they rent themselves out. And frankly, look, just like we did in the crisis in 2008, these are great learning times to see who survives these things, who comes out intact. You can't really hit somebody harder, other than like dropping bombs on us. You can't really hit things harder than we've been hit in the last year. So it's a real good test to see who can survive and who can come back and who can turn themselves around in a crisis like this. And it helps. Now, don't forget, that is what our long-term portfolio is. Our long-term portfolio is full of those stocks. I started doing a buy list, but our buy list is still the long-term portfolio. Oh my God. And it went up today. That is so funny. That's how good the long-term portfolio is. Wow, that's messed up. So this morning, though today isn't Tuesday. Ugh. We were at 214.6% this morning. And what was the number? 1573. And now we're at 219.1%. And it's 1595. We made $20,000 today while the market's selling off. We actually made money on this sell-off in the long-term portfolio. That does not include the hedges. Obviously, the hedges did gangbusters. And why is that? Because the stocks we have are the kind of stocks that are going to outperform. These are the stocks that people run to when all these momentum stocks stop paying off. Berkshire Hathaway, Cisco, Foot Locker, Gilead, True Gileads, Gold, Goldman Sachs, IBM, IMAX we just talked about, Intel, Macy's we just talked about, the marijuana ETF, I guess you run to that in a crisis too, 3M, Philip Morris, Pfizer, Tanger Factory Outlet, Diamond Property Group. I mean, the stocks I'm going to talk about, those are the ones. SunPower, who got downgraded today because they made too much money. Oh, that's another huge one. God. Oh, they did. They made too much money. They're right. They should be downgraded at this point. AT&T, Walgreens also exploded. And look, and I said this over and over, and I know it's a boring way to play. I know that. I'm sorry. It's very boring to do this, but it's you know, we played the momentum game earlier this year. We jumped on all kinds of stocks when the crash happened in March. And if you want to see us doing it, just go back on this, you know, if you want to educate yourself, if you're a new member, just go back on PSW and look at our top trade reports and just click older and keep going back and look at what we bought. And don't forget, we reset our portfolios in November of last year. So if you go back to November of last year, okay, here's around where we liquidated ourselves. And then what did we buy to replace in November? Let's see. Oh, I'm sorry, I went the wrong way. Okay, October 22nd. So Irobot, who is now, just look at the picks that we had at the time. Here's Irobot. We should have faster way to do it. IRBT. You know, a value stock, if you just wait, it'll get realized. If you understand how to pick a value stock, you don't have to do much. What was that trade on Irobot? Let's see. Here you go. Very simple. They're still blah, 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 blah. Okay. By 2022, so next January, 50, 65 bull call spread because they were way low at the time. It's $6,000 on a $15,000 spread, $9,000, 150% of upside at 65. At 65, we hit the freaking goal over here. we hit that goal by May. It only took us 6 months to get there. We're nowhere near 2022, and it's miles up. I mean, this is obviously we cashed this out already. I mean, right now it's completely in the money. And if it's flatter down, I have my eye on selling 5 of the 202.45 puts now. You know, so then we sold the puts to even reduce the basis from 6,000 to 1,000. You know, this is how we build a portfolio. You see, and you see these trades in 90% of the top trades, 80% of the top trades, they end up in the long-term portfolio. This was for here's where we set up the dividend portfolio. We started building, so we put in AT&T, we looked at NLY, ARR, we were looking for REITs to play. Top trade, Philip Morris, it's still there, right? We just talked about that, it's still in the portfolio. China Mobile did not actually play out well because of this bullshit that went on recently. TAP and Macy's, Molson Coors, Macy's, and Molson Coors came back nicely too, right? LB exploded. All right, here is what excellent. So U.S. Steel, of course. And whoa, oh, I see. That's a frozen picture. That's interesting. Oh, that's a VIX. That's not even the thing though. So I'm sure U.S. Steel did well. We already took it back out of the portfolio. Yeah, see, you know, it's the problem. When you play fundamentals, you just got to be patient. They'll pay off eventually if you know what you're doing. So here we talk about U.S. Steel on the small. So here I was talking about different things to buy. Back in November, I talked about. Oh, here you go. Whoa, what a list! It's very hard for me to justify paying more than 20 times for stock. There are plenty of stocks trading below that, like MT, Tiva, SCAU, Dell, Viacom, America, the airlines that had a hit but came back, Vail, Ford, SoftBank, that must be ING, ISAN, it's another bank, LNC, PUK, BCS, MU, Freeport, love them, Prudential, S&P, Lennar, KHC Builders, UBS More Banking, CBS, of course, was my favorite table banger early in the year when it was so cheap, Goldman, Capital One, MetLife, MFC, LYG. You know, these are good. These are stocks that I consider good buys. And we had a whole bunch of smaller caps that I liked. Whatever. I mean, it's just a lot of them, right? So, you know, it's not hard to pick things based on valuation. It's not like I didn't have a list. And all these stocks did fantastically, made their money. Vail also exploded, obviously, recently. And what was our trade idea for Vail? Our trade idea for Vail was the 2022 1015. So we're already at goal now on the 1015. How does that one do? It was $4,000 for a $20,000 spread. It's got a $16,000 400% upside, and we're already at target. And no, it's not. It's not Gamestop. It's not freaking BlackBerry out of the blue for some reason. It's not AMD. It's nothing. It's a simple, basic play. And all you're doing is playing for the stock to go back to its value. And you make 400% without all the drama. Here's CMG. I think I was shorting it. Was I shorting it or was I long? I could have been long at that point. Who knows? Nope, we were shorting it. I bet that didn't work out. CMG, where are they now? Oh my God, 1,500. That didn't work out at all. So shorting, not a good idea. That was a complicated one. I know we made money on that, but we had to really do back somersaults to get that thing done. Macy's again. Oh, only up to December. Oh, no. Wait, what happened? Where's There we go. CMG. Macy's again. You know, I mean, this is a quarter of picks. TD Bank and exploding, of course. Toll Brothers, also Matt. Look at that comeback. Holy crap, 20 to 55. H&R Block doing what it always does, coming back. IMAX, of course. Now, at the time, what was our target? It was 20, so we're right back where we should have been. Our June target was 20, and we came in at 14. So in June, we did adjustments. We already went through that cycle with IMAXO and adjusted and sold out. Middleby, oh, I love these guys. Wow, look at it. They completely exploded too. Our target was in December was 400. We blew that out the window. Viacom, oh, this was a funny one. In Viacom, we were looking for $35, $42.50 in 2022. We were only trying to get back to $42.50. You know, and it's good. It's like what we're doing here is like I make my case. I talk about the logic of why we're doing the trade. Here's a DFS. Still, they topped out and then they fell, but we liked them really cheap. $8. It's like it hit 100. We picked the 8. I'm sorry. So, hey, what are we doing here? Oh, that was a complicated spread. We bought 20 of those and we sold the shorter term call. So it's a 60-75 spread basically. And that one obviously came in. SKT, as usual, using a hedge on SPY. That was actually paid off really well. The hedge on SPY in February was brilliant. SunPower, another favorite. WBA also had a crappy year, but came back. But look at that target though. It was the 40-55 spread. We're still in that range. It's basically just on track. After all the chagrin of the past year, they're on track. But why are they on track? Because value. Because unless something permanently disrupts the business, the value is still there. Top trade, Six Flags we liked. We liked Apple, which obviously had a good year. MTN, huge. Obviously, that's Vail. Ski resorts doing fantastic, which you would think not, but they are. Another incredibly well-timed in early March, we went for hedges. Geez, imagine how much money those things made. Viacom, of course, I love Viacom. Teva, Viacom, oil. That was 3 picks that day. March, AT&T again. Comcast also boomed up. That's Comcast. Constellation Brands had a good year. People staying home and drinking. ALK I like a lot. I'm not sure why CCL is there, but Cheesecake Factory I like. Oh, I wonder if they're still cheap. They might still be cheap. I'm trying to see who has escaped the massive thing, right? Who hasn't gone up? Nope, Cheesecake Factory flying higher. I mean, look, you'll notice like basically every single one of these trades is a winner. And how often do we do them? You feel like you hardly ever do them, but we're doing them a few times, right? Here's March 10th, March 17th, March 18th, 2 that week, March 23rd, 27th, April 2nd. Oh, there's nothing in, no, these are all March. Wow, there's a lot. Then April 3rd, April 7th, April 13th, April 16th. So, you know, when there's a bargain, and you buy it. It's not complicated. This whole thing is not complicated. In good times and bad times, we buy. April was after the disaster. I'm not, you know, there's no particular mention here of like that we had a disaster, but you know, we started doing these trades. Stars, ALK, Cake, BBY. Put another hedge on in April. Simon Property Group. Notice we go back to stuff. If it's cheap again, we'll buy it again. Berkshire, Foot Locker, MU. This is how our long-term portfolio filled up. It made 200%, but we did it month by month, not every day, not every freaking day you're buying stuff. We would make a trade and we would buy something. Then we would have wait a week or two. Then we'd make another trade, buy something, wait a week or two. Not rushing anything. Arconic was the break off from Alcoa. HMY is another gold company. Don't forget GOLD was our stock of the year. Here's IMAX again, because it was really cheap back then. But that's how we build our portfolios, okay? It's like step by step by step. You don't rush. You don't fill it all up. You don't say, oh, I still got money to spend. That's not how you fill a portfolio. You fill a portfolio over time. You build up your position sensibly. You look forward. You figure out what's on sale. What should you be buying based on the forward conditions? And you sell also. The other important thing is to sell. We went through a series of purges. Every time I would do a long-term portfolio review, especially into the fall, at the end of the summer. I think I started almost every single long-term portfolio review with, let's see if we can shut this thing down. And I would go over the positions one by one by one. And eventually we just got left with the 10, 20 positions that I can't shut down. They're too good. They're too good to shut down. Those are the only things we're still playing. The ones that I could not bring myself to sell because I can't justify selling them. I'm trying to sell them. I'm thinking of ways to sell them. I can't do it because I have nothing better to do with my money. Leaving in cash is not a good option, right? I want cash on the sidelines, but I can't leave all my money in cash because then freaking government's going to devalue it on me. You have to find that happy medium. Oh, the Fed. Hey, the Fed's up. The pace of economic recovery has moderated in recent months. Weakness in sectors most affected by the pandemic. Oh, no shit. Look how smart that Fed is. The path of the economy depends upon the course of the virus and the vaccinations. It's like a magic 8-ball. They continue to aim for inflation above 2%. Big nothing, huh? The Dow's down even more. The health crisis poses risks to the economy, inflation, and outlook. Wow, wait a minute. This was a statement. They made a lot of change. They made a lot of notes in the statement. These aren't minutes. This is a statement. This does not sound like a good Fed statement. Let's take a look. Oh dear. And I don't have any shorts on now. All right, so by the way, so if you don't have any shorts on, because I took them all off, what do? You short the laggard. Who's lagging? The Russell. We know the Russell can come down to here, 82. So we know we got a 50-point drop on the Russell ahead of us if everybody else drops off. They're much higher than the other guys. They recovered a lot. So you want to short the Russell if you're going to short something. So basically, we would just go to the Russell. And let's say we want to short them. Let's see. There we go. Got one fill. All right. So we got one short at 34. And we'll see if we fill anything else. Then we'll put a stop. 40 is too low, maybe like 45. We would stop out at 45. So we're going to risk losing $6 or 6 points, which is going to be $300, I think. Yeah, $300. So we're going to risk $300. But you can make, if it's a 50-point drop, you're going to get $1,500. So we're going to risk 300 to make 1,500. Why? Because the other indexes are clearly falling back down. Right? The Fed just said something that's not particularly happy, and everything can start crashing out. Gamestop up. Gamestop's up $175 for the day. All right, so now let's take a look at that FOMC report and see what they actually said. La-di-da, HTML. Oh, that's very short. All right. All right, committed to using full range of tools, blah, 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 blah. Okay. The COVID-19 pandemic is causing tremendous human and economic hardship across. Okay, you know what? I don't think that's good. Tremendous human and economic hardship and the world. The pace of economic activity and employment has moderated. That's not good. Has moderated. Weakness concentrated in sectors most adversely affected by the pandemic. Weaker demand. Earlier declines in oil prices have been holding that consumer price inflation. Okay. Overall financial conditions remain accommodative, obviously, in part reflecting policy measures, blah, blah, blah. The path of the economy depends significantly on the course of the virus, including progress on vaccines. The ongoing health crisis continues to weigh on economic activities, continues to weigh on economic activity, employment, and inflation, poses considerable risk to the economic outlook. Oh my God, it's like, wake up, people. We have a crisis. The committee seeks to achieve maximum employment inflation at a rate of 2% over the longer run, blah, blah, blah. Committee keeping the target price, no surprise. Blah, blah, blah. It may be a surprise though, because people may have thought they were going to do something, but they're not. They're waiting for Biden to do something. Assessing the appropriate stance of monetary policy, continue to monitor, blah, blah, blah. So no change in the Fed policy at all. They're putting the ball into Yellen's court, saying, okay, this is Treasury Secretary, what are you going to do now? So, and this is a unanimous statement. There's no dissent on this statement. Everybody agrees that this is what they're doing. So there's nothing bullish here. There's not any great outlook, and there's no help. So will the selling continue? We'll probably continue down to have a nice 2.5% correction. And if we want to chart that out, that's not the futures. That's the futures. So, ooh, what is that? Okay. Basically, we double tapped at 38.60. So So 37.63 is the 2.5% line, right? 37.63. This is how great the 5% rule is, right? That's your 2.5% line right there. So 37.63 minus 38.60 is 96 points. So let's call it 100. And that means the bounces are going to be what? The bounces are going to be 20 points. 20% of your drop is your bounce. So from 37.63, we got 37.83 is a weak bounce right here. That's your weak bounce line. And then 38.03 is your strong bounce line. So right now we are here below the weak bounce line, 83. So 83 and 03, those are the lines you're going to watch as far as playing the futures. So basically on the S&P, if we get back over 83, that's where we would stop out our short play. Doesn't matter what the Russell's doing. If you're over 83, if you get over the weak bounce on the S&P, that's when you want to change your mind. But meanwhile, these other guys aren't filling, so we're actually heading down. We're already making a profit on this one. So what you're looking for here, see there, 37.83. So 83 is where you would stop. But we think this 80 is going to break down, and this whole thing is going to start collapsing again. And that's it. That's how you play it. You pay attention to what's going on in the news. Oh, next week we're going to talk to that guy. I forgot his name. And I'm going to be on his show, I think, tomorrow, maybe. He's got a podcast also. The one who does that news thing that's really phenomenal news program that we talked about last year. Was it last year? Yeah, about. And, you know, really great access to news and information. I just love his program. So he's going to come on. He's going to come on again because I love his stuff. Let's see. All right, not too much exciting otherwise. Let's get some questions. I bet people like questions at some point. Wayne says, in light of the lower US dollar, what risk do you see for gold pulling back? And where are the support lines for gold in the event of a downturn and a dollar rise? Aha. Well, as a general rule of thumb, I would assume that gold does a double move to the dollar. So if the dollar goes up 10%, down 20%. So just roughly, that's where you're going to be. Now, gold is double topping, basically. And maybe it's going to hold its line. If gold gets supported 1,800, it could be heading for a really nice move up. And if you think about the currency debasement, if we say 1,000 was the fair value here, right? So 1,000, so let's say 1,000, and 1,000 is the fair value because that's basically what it costs to extract. Barrick Gold has a cheaper cost of extraction. Excuse me, but industry-wide, I would say something in the neighborhood of like $850 to $1,000 is probably where most of the industry is on extraction costs. So that's your real baseline for gold. It can't really get cheaper than that. So these days are gone. And at the time, they were able to extract, obviously, for this kind of price. Now they're extracting for more like 1,000. There's several reasons for that. One of them is you're depleting the mines. There's nothing left. We've used almost all the gold on the planet. There's less and less to pull out of the ground. Just like oil, there's less to pull out of the ground. It's harder and more expensive to get to the gold that's new. But this whole thing is going to flip at some point because at some point somebody's going to go and get an asteroid, bring it back to Earth, and mine that. And they're going to take an asteroid that's already full, that they know for a fact is full of gold. They're going to go get an asteroid, bring it back, and say, here you go, here's all the gold you want. And the way they do it is they take the asteroid, they move it. Now it's very dangerous. Now, of course, if they make a mistake, the asteroid plunges into the Earth. But assuming they do it correctly, they take an asteroid, move it into an Earth orbit, and then set up a station and mine the asteroid from Earth orbit, and some way or another transport it back to Earth. You know, and it's worth doing, obviously, for the money involved. It should be a big industry in the future. Not, you know, long future, but it'll be one day. It'll be a big industry. It's just mining asteroids. And the best way to get it is going to be a space elevator. So whoever invents that, invests in that company. So let's see, where were we? Gold. So the question was support. So the real support then is around 1,000. I would have to go. I have to believe 1,600 is a solid support line at this point. So I think that's where we're going to be. Is this should hold up. 15 the worst, but probably 16 is going to hold up as support on the way back down, if there's a way back down. So if we assume that 100 is support, or 1,000 is support, sorry, and the dollar has been devalued since the Trump era, is gone down 10%, then we say 20% is 1,200 is the minimum. So based on the current dollar supply, 1,200 should be the minimum. And then you kind of have to factor in, again, we think there's no inflation, but there really is inflation, obviously. Anybody buys food and buys things, groceries and whatever, and gas, or buys movie tickets, buys show tickets, goes to baseball games, you know there's inflation. AMC is up 500% for the week. GameStop is up 700% for the week. KOSS is up something crazy too. All right, insane. So I think the gold may catch on and start taking off and could go well over 2,000, but I wouldn't count on it. It's just not a bargain anymore. So I mean, I guess that's really my answer. It doesn't matter. I think the floor 1,600 should hold. I think that's going to be a pretty set new value considering how many dollars are in circulation, the expectations of inflation, the danger to the economy, so on and so forth. I think the 1,600 is probably safe. I think if Bitcoin collapses, that'll help gold, and I think obviously if currencies start collapsing, that'll help gold. And you would think both of those things can't happen at the same time, but they sure can. But the bottom line is, look, if everything falls apart and nobody will take your dollars anymore, okay? So you go to the store and they say, we're not taking dollars anymore. We want to see gold, okay? Do you think those people are going to say, or Bitcoin? Do you really think the guy at the 7-Eleven he's got a shotgun? There'll be a 7-Eleven guy standing there in front of 7-Eleven with a shotgun. He's got his stuff in the store. It's basically the shell of a 7-Eleven. And the world's collapsed, and they demand like exchanges for their products now because the monetary system is falling apart. Do you think they're going to say, okay, so we don't trust the dollar and we aren't going to take any kind of currency. You've got to have something to trade, or a Bitcoin. Those we take. I mean, come on. So the Bitcoin will collapse with everything else, and I'm not predicting a complete, futuristic dystopia occurring, but I do think that there's going to be a hell of a reckoning with our monetary system because we have made a real mess. We haven't made a mess. We've abused the concept of fiat currency to make it meaningless. We being everybody who's got a fiat currency, it's like being the banker in Monopoly, but everybody's the banker, and you can clearly see one guy cheating. So rather than stop the one guy from cheating, everybody decides to cheat, and everybody's dipping money in the bank, and what happens in Monopoly if everybody's cheating and everybody cleans out the bank of all the money? Then what's left to do? Then the only thing you can do now, because the money doesn't mean anything, because you've taken it all, So the only thing left to do is to buy the properties, right? Buy the real assets. So what do? You start bidding up the real assets. You start offering more and more and more money for the assets because you have all the money. What you have is you have money, which is worthless, but you don't have assets, which are real and worth something. So you start using your fake money to try to buy assets. And that's the next stage of this crisis. Gold is an asset. I like gold. I would not play gold. It's too expensive right now. If it comes back to 1,500, 1,400, 1,600 in that range, I would begin building a position again because I don't think it'll go much lower than 12. But in reality, I have no desire to own it here. The stock, Barrick, GOLD, back at 22, starting to get interesting again. Okay, that's people are starting to panic out of that for God knows what reason. We've already taken our money. We took our money and ran because we knew 30 was too much, but now we're getting back here. We came into it here, stock of the year at 15, 16, stock of the year. Had a great run after that, almost doubled. So now we're back in the range. Could go lower, could go higher. It's a little tricky right now, but starting to get down. If it gets down to 20, we're jumping all over this thing again. I mean, I don't mind going back to my stock of the year twice. It's fine by me. I mean, don't forget the stock of the year this year is Intel, but last year it was gold. Where was I? Oh, wait, questions. La-di-da. Alistair says, GME, they sell consoles, gaming accessories, and memorabilia such as superhero statues. Yeah, but they're not good ones, are they? They're crap. As a consumer of such things, they are generally the really crappy commercial ones. You know, I mean, so does what's that T-shirt place my kids like? Ugh, I can't remember. There's some store in the mall that has like, you know, T-shirts and also superhero statues, but those are not good. I mean, good ones like in a comic book store, they have really cool ones, not like you know, like hand painted and stuff like that, not the things that punched out of a plastic mold. So anyway, so gaming accessories, really? I mean, consoles. It's like all things you get on Best Buy or Amazon. I just don't see the function. Oh, Bill. Oh, Eileen says this. Bill Olson is the guy who's going to be our guest next week. Thank you, Eileen. Kay says, I have uncovered 45 WBA January 23rd, 35 calls, sold 25 WBA January 35 puts. Why does everybody think this is a place to have these discussions? This is for chat. Should I now cover with 55 calls? We had this discussion on WBA in member chat this morning. Had a whole thing about WBA. So I am going to go over it again. But I refer you to Oh, maybe it wasn't WBA, wasn't it? Okay, I could be wrong. What the hell were we talking about then? Huh. In my mind, we were talking about WBA. IMAX. How weird. Or did I write about that and forget to hit the button? AT&T. No, I swear I remember having that conversation. I wonder what happened. Oh, well, anyway, okay. So WBA, oh, we're going to look at the chart. You know, and again, when we do the value stuff, when we pick something of value, I think 50 is pretty fair. You know, at that point, because you're 50 on WBA, we're looking at, shoot, that's not Yahoo. I was just outraged at how low it was, but now it's in a more normal place. See, the market cap is 44 billion now. And if we look at their ability to generate money, WBA, so, you know, 50 billion there, they can make 4 or 5 billion in a good year. So it goes back to the thing. I absolutely like them at that price. I wouldn't be too aggressive because it's still a tough time. I don't see that WBA is really getting the virus thing done. That's also interesting to me. I see that in Florida, Publix, the supermarket chain, is doing all the vaccinating, not Boots and not Walgreens and CVS. It's the supermarkets that are doing it, which is really weird to me. And maybe that'll change as we ramp it up. But right now, they've decided that for some reason the supermarket should have it all. And when I say the supermarket in Florida, it really only is Publix, or in South Florida where I live. They do not have other. It's not like you choose your supermarket. Basically, it's the Publix over here or the Publix over there or that Publix. It's not like. It's the craziest thing. They totally dominate the supermarket business. I mean, coming out of New York, where we're like, literally, it's like, do you like this one or that one or that one or that one or that one? It's like 8 supermarkets around my house. Instead, you have 8 different Publix around my house now. Not like 8 other supermarkets. There is no other. There's Whole Foods. There's a thing called Fresh Market, but like a mini Whole Foods kind of place. I know there's an Aldi, which is kind of up and coming. And other than that, there's only some local things. There's a thing called The Boys. I'm literally thinking of everything we could possibly buy, but these are all trips. They're not local at all. I mean, they're all a good distance from where I am. But there are 8 Publix. I know that because I just looked it up. I was surprised because I went to look for where I can get vaccinated. There are 8 Publix within a couple of miles of me. It's the stupidest thing in the world. You have to really go out of your way not to shop at Publix in Florida. So I guess maybe that's why you put it there. Where was I? Who's this? Oh, Walgreens. So Walgreens, good bargain here, great stock. And your question was basically, you have 35 calls and you sold 25. So 25 out of 45 are covered. Should I cover with January 55 calls? Oh, I see. No, wait. You have 45 calls. I don't get this. I have uncovered 45 calls. Okay, I've uncovered 45 calls. Then it says 35 calls. I don't know why it says that. Should I cover? I would cover some, and I would cover with the 50s. I wouldn't be too crazy, but I would do I would cover 20 out of 45 or 25 out of 45, and then see what happens. You can always roll them up and higher. But you have oh, I see. You have 45 January 23, 35 calls. Yeah, so I would cover half at 50, roughly 25 at 50, and see what happens. You can always roll them out further. Not a permanent decision. And you can always cover more and save yourself if it goes down. Did you buy a 300, 600 GME put spread? I didn't actually buy it because I just didn't have time. And I didn't at the moment, but I think it's a good play. We talked about that in chat that I thought that this was a good time to put your foot down and buy the. I wanted to buy the. I think it was the January 300 puts and sell the March or April 160 puts as a spread. That was what I thought would be a good idea. Phil, some insight into Merck would be appreciated. Thanks. Merck's an also-ran pharma. They're not going to have a vaccine, so I didn't think they were as exciting as Pfizer. They're a perfectly good long-term position. I don't know if they're definitely cheap at the moment, but there's nothing wrong with Merck. I like Merck, and Merck's a boring, steady company that makes money. I like that. And $77, and we don't know what that is. I haven't looked at Merck in a long time. But I thought Pfizer, I know that when I looked at Pfizer and I looked at Merck, I always look at Merck with Pfizer, and Pfizer is clearly better. Here's Merck, $203 billion. And they're making 10 billion. Here they say they're going to make 13, 14 billion. That makes them very reasonable. That's all. They're reasonably priced. I just like Pfizer better. I thought Pfizer had the kicker of the vaccine, and their numbers are just as good. And Burns says, talked about covering Macy's this morning. Oh, I see. He's saying, okay, it was Macy's we talked about covering, not WBA. How's LB looking now? Having a very bad day. I honestly, we lost interest in LB. But used to like him a lot. I used to care. I don't care anymore. Wow. Well, 45 was too much. There's no question about that. You know, and again, it goes back to it's such a basic thing. Just because I liked LB when they were 10 doesn't mean I like them when they're 35. They're 45. This is a $10 billion market cap for LB. And then you say, well, what is LB doing to justify a $10 billion market cap? And don't forget they spun off the division, so they're not the same size they used to be. They're not going to go back to normal. Again, I forgive this. They lost some money last year, big deal. They're going to make money this year. They're going to make money this year. They're going to make $600 million in next year. Okay, $600 million, but you want $12 million for the company. It's already 20 times the future earnings. So where's the excitement in that? Where's my growth? What am I buying? I was excited about LB, and LB was well, actually, it wasn't our stock of the year because it was it here? It was. In this year, whatever year this is, 2017, LB was going to be the stock of the year for 2018, but what happened is they ran up too much. So when they were down here, I was super gung-ho about them. Okay, and obviously since then they've come down considerably. But I was super gung-ho about them here. They had this really big run, but they already started the run in November, and we picked our stock of the year in Thanksgiving. So it was too much money then. I think it was that year. Maybe it was this year. 2018? Maybe it was 2018. I'm sorry. So maybe it was 2018. I just know we had a big run into Thanksgiving, and I said, no, I can't do that. And so instead, we went with Hanes, HBI. So we went with Hanes, which is another underwear company. And it wasn't that I was all fixated on underwear. They just happened to be two very strong candidates that were both down at the same time. And Hanes, 3 years. Again, I wish I knew what year it was. I don't know. Anyway, whatever it was, Hanes was just a better price. It was a better value. So we switched our stock of the year pick from LB to Hanes because timing-wise, when we got to Thanksgiving, that's where it was. That's why IBM didn't make the cut last year, and that worked out though. But IBM was going to be the stock of the year, but then it ran up too much, and that happens sometimes. It's just a timing issue. Who's cheap at the time when we make the final pick? So this year it's Intel for sure. We know that. Last year it was GOLD. The year before that, I think it was IBM the year before that. Yes, it was. It was IBM the year before that. And the year before that, it was Hanes. Although officially it was LB for our members, but when I went on TV and I picked it, I switched to Hanes because it was too late, because I couldn't announce it until I got on the show. And so officially my announcement was for Hanes because we had already made all our money on LB. It was crazy. It just went up way too much, but it was by far my favorite stock that year. All right, anyway. So that's it. So look, it's earnings season. There's lots of stuff to buy. Oh shit, going down further. All right, but so you see what I'm talking about here, though? You see how easy that was? We picked the index. We could see the indexes were weakening. We picked the index that hadn't fallen back yet. We got ourselves a position here. Oh, you can't tell. Why is it? Oh, here you go, 380. So we made a quick $380. So now clearly we're going to make our stop line at 218, 217, somewhere around there. So if it comes back, well, there's a mismatch here. It's delayed. So we're stop. We're done with those. We're not going to fill those orders now. So now we make a stop and we just get out if it bounces again, and we watch everybody to see if it's synchronized at a bottom. But we had a nice little sell-off. We're a little bit below where we were before, and then we just basically stop out and take the profit. It's a quick look, $435. That's how easy it is to do that. All you got to do is pay attention. Look at everything. Don't look at the one thing you're playing with. That doesn't tell you enough. You have to look at everything and make those decisions. And as far as stock goes, patience. Please read back last year. Look at how we built up our long-term portfolio. You know, look at the virtual portfolio tabs. Look at the top trade alerts. It's the same thing. That's how we built those portfolios one by one by one. We added stocks. We put out alerts. We said, here's a good one this week. Here's a good one this week. And some weeks we would be adjusting. If we had a pullback, we adjust the stocks we already had. Other times we would just buy more. But it's a brick by brick building a wall kind of thing. It's not all at once. It's never all at once. You don't dismantle it all at once. You don't build it all at once. You just do it sensibly over time. So that's what we're going to do this year. We're going to build all new holdings in our portfolios. We're going to find a new batch of positions, and I'm very excited about that. I love earnings seasons because things go on sale. Oh, Powell's talking now. And Powell's saying nothing. Expect to keep accommodative policy until employment and inflation goals are reached. So thanks for nothing. So the Dow down 560 now. Holy cow. So yeah, 2.2%. We're going to be down 2.5% overall. All right, so the Fed there's no more left to do. They can't do more, and that's the thing. It's all baked in at these levels. And if the market doesn't like that, it's tough luck because they really can't. There's a limit to what you can do because after a while, what the Fed does becomes ineffective, and if the Fed is seen as ineffective, that's the worst thing that can happen. The Fed has to maintain the illusion that they're still effective, and they do that by not acting. If they keep acting and the action becomes ineffective, then they're dead because all they have is the facade that they can actually do something. Keep that in mind. So please, guys, trade carefully. Let's just watch ourselves. Let's not get too crazy. Let's not chase things. Let's find bargains. There are still bargains out there. We will still find them. We will still find things to trade that we can sit down. And in a day like today, in one day, $20,000 was added to the portfolio because these are good positions. They're not bullshit. They're not half-assed things. He said, he talked about LB. LB's having a bad day. Well, LB's not in our portfolio anymore. Why? Because we eliminated all the stocks that we thought could have a bad day. We eliminated the stocks that we felt might not hold up if the market pulls back 20%. We eliminated the stocks that we may not